As time goes on, it's becoming more and more obvious that Donald Trump is destroying the US dollar on purpose. And this might sound scary, but I'm going to explain why it's kind of a good thing, and in the end I'm going to show you why you will benefit as an investor. He's not doing this because he's reckless, but because it's the only way to save America. He knows that debt is unsustainable. He knows that the world is shifting. And he has a plan that will completely flip the global financial system. And they're calling it the Mar-a-Lago Accords. Now, let's dive in and let's discuss how you can profit from Trump's plan to devalue the dollar. I'm pretty sure you've seen headlines like this. The damage is done. Trump's tariffs put the dollar's safe haven status in jeopardy. You've probably seen this happen. So the worst week for US stocks since the COVID crash, as China hits back on tariffs. Yeah, that's right. We've seen one of the worst sell-offs in the stock market, in the crypto market. And yeah, people are panicking. The newspaper headlines are all pretty negative. The world is in record uncertainty. And we are living in the Trump era. So when I'm, talking with my friends about, hey guys, what do you expect that will happen next in the crypto market, in the financial markets? And nobody really knows. Why? Because tomorrow you might wake up and Donald Trump and his team announced a completely new announcement that completely puts the world upside down. At this point, you can't really plan very far ahead. Companies are suffering because nobody really can make long-term decisions in this current uncertain economic environment. According to many calculations, many publicly traded companies will miss their expected earnings, and as a result, they're selling off. Also, there's a very big fear that inflation is going to go up and that the cost of goods for these companies will be a lot higher, meaning their profit margins will shrink. Or they need to pass on this cost to the end consumer, meaning that ultimately this will drive up inflation. So again, so many different options that can happen right now, and nobody really knows which paths are actually going to play out right now. And what I mentioned, every morning you wake up and you check out the newspaper articles and you see yet another new trade tariff or new trade war policy being implemented. We've seen everything from reciprocal tariffs between the United States and China to raising it and then again raising it and then going towards blocking certain industries. For example, China stopped exporting rare earth minerals, which are needed in industries like electric vehicle production, like Tesla, Elon Musk's company, and many electronics needed too. Now China came with yet another new rule that they're not going to buy any more Boeing airplanes, and they're going to stop servicing of Boeing airplanes in China. And that is kind of a very annoying thing for the United States, because that means that Boeing airplanes can't really travel to China, because after every flight, airplanes need to be serviced so that the probability that there will be an airplane crash is going to be minimal, but they are stopping these Boeing parts from entering China. So now we're seeing additional moves being made on the side of the United States and China that don't only involve import tariffs, but also strategically trying to hinder each other and poke each other in areas where it might hurt. Well, all of this started with the following problem. The United States has a very big national debt. As of right now, they're $36.7 trillion in debt. In case you don't know, trillion has 12 zeros behind the comma. That means 36 trillion. It's such a big amount, most people can't even comprehend it. Because we will never see that amount of money in our lifetime, but the United States is so heavily in debt. So one of the core pillars of this Trump administration is to initiate this DOGE, the Department of Governmental Efficiency, and you're seeing that DOGE has currently already saved around 324, almost 325 billion that would otherwise be an amount of money that the United States would have gone into debt even further. So Doge is helping them to basically save money, become a more efficient government. But again, $36.7 trillion, it's not nothing. And in fact, if you look at this as a ratio, so the total federal debt, meaning the amount of money that the United States is in debt, the national debt, as a percentage of the GDP. What is GDP? GDP stands for gross domestic product. In simple terms, it means the total economic output of the country. So right now, or last year, the total federal debt was 124%. 124% of the GDP. So meaning that if you take the debt and you compare it to the total economic output of the United States is much deeper in debt than what it's currently producing in terms of economic output. So the debt is becoming much bigger right now. The way that you can, for example, compare this is, let's say that you as a country are producing, you're working and you're generating a salary. Well, in this case, the debt, because maybe you're borrowing from the bank, your debt is much higher than the amount of money that you're making. So if the debt becomes bigger and bigger and bigger, then your possibility or your capability to pay off that debt becomes smaller and smaller and smaller over time. And that's where it becomes risky, because if the debt becomes too big compared to the GDP, the economic output of a country, then it might mean that over time a country could go bankrupt. And on that topic, Ray Dalio, a famous hedge fund manager and billionaire, has spent the past 50 years studying how great empires collapse. And his recent findings suggest that America is showing 3 historical warning signs. And now he's revealing what they are and how to protect yourself. All right, hey, in history we've had many great empires. We had the British Empire, we had the Dutch Empire, the Netherlands, where I'm from. At one point, even though we're a very small country, we used to rule the world. We used to be the center of global commerce. And right now, the United States is the global power, or the dominant power in the world political and economic system. But Ray Dalio has studied these other empires, and the British Empire, the Dutch Empire, they have all fallen. They are not that dominant anymore. They're not so powerful anymore. And why is that? Well, when Ray Dalio studied these countries, he found that their life cycle followed this particular pattern. All these great empires, the Dutch Empire, the British Empire, followed this cycle. So they became the New World Order. Then, the world went through a period of peace, prosperity, productive debt growth. Then the debt becomes too big, and we see an increasing wealth gap. So that's what we're seeing in the United States right now. So $36 trillion of debt. We're seeing that the difference between rich and poor is increasing. We've got super rich billionaires like Elon Musk that have around 200 billion. At the same time, many people in the United States are struggling to survive from day to day. So we are now seeing that the United States is at this tipping point, and on the other side of this curve, you see the downfall of these empires. So at one point, the debt bubble burst because the economy can't really service the debt, can't really repay the interest, and that's where the uncertainty starts to go up, the panic starts to go up. This results in economic downturn, and the only way to get out of that is to print excessive amounts of money and borrowing even more money to go in debt to pay off the debt. That's what people do. They borrow debt, or they borrow money in order to pay off their debt. That's what happens, and that's what countries do too, but just on a much bigger scale. And then we see either internal revolutions or external wars. And that's when we see debt and political restructuring and a new country that takes over as a world power. And then we see a new world order. So this is a cycle that we've seen repeating every single 80 to 100 years on average. And right now we might see a very big shift in this global economic system, the global world order as we call it. So let's talk about one of the perks of being the global dominant power in the world. Well, that is to have your currency to be the global reserve currency, meaning that most of the global trade is settled in your currency. And right now the US dollar is the reserve currency of the world, meaning that most of the important goods, oil, gas, are being settled in dollars, and that many countries around the world are also holding reserves in your currency. So let's dissect this a little bit, because here we see this article by Morningstar, and they're claiming that the US dollar is still the world's currency, but maybe not for much longer. Now let's have a look. So the dominance of the US dollar remains strong in reserves, trade, and transactions. So let's dissect this real quick. So currently 57% of all of the global trade is currently settled in share of global foreign exchange reserves. So all of the countries, if you look at their reserves together, then roughly 57% of all of their reserves is still the US dollar. Now, 54% of all of exports are currently invoiced in US dollars, and around 88% of foreign exchange transactions are currently settled in US dollars. So think about foreign exchange transactions. You've got all of these forex trading pairs like the euro dollar, or the yen dollar, or the GBP dollar. So all of these trading pairs have a component, the dollar, in which they're denominated or traded against. So still 88% of these forex transactions involve the US dollar. So still there's a lot of activity in the dollar. The dollar remains strong. Okay, let's have a look now in the euro. So here we had above this chart, you see a menu. So we can select between dollars, euros, pounds, yen, and the yuan. So now when we select the euro, roughly around 20% of all foreign exchange reserves are in euros. 30% of the export is invoiced in euros. 31% of foreign exchange transactions involve the euro. And if we compare that to the pound, it's even lower. So 5% of global foreign exchange reserves are in pounds. 4% of the export is being invoiced in pounds. And 13% of the foreign exchange transactions involve the pound. And when we look at the yen, then 6% of global foreign exchange reserves is in the yen. 4% of all of the global exports are invoiced in yen. And 17% of foreign exchange transactions involve the yen. So we see a very significant difference with the dollar. The dollar scores much higher on these ratios. The euro is also actually doing pretty well, but the dollar definitely leads still. But what this article is saying, the US dollar is still the world's currency, but it might not be for much longer. Well, let's have a look. The US trade deficit by country. So what is a trade deficit? Imagine that we are trading. I, for example, am specialized in producing bread, and you are specialized in producing butter. All right? When you buy from me, you're importing. When you sell to me, you're exporting. When you are exporting more than you're importing, you have a trade surplus. You are making more money on this trade relationship than it's costing you. On the other hand, if you're importing more than what you're exporting, then you have a trade deficit, meaning that net you are losing money on this trade relationship. So the US has a very big trade deficit with many countries around the world. So here we see a chart of the US trade deficit in 2024 with all of these different countries. So here you see in 2024, the biggest trade deficits were with China, $270 billion, with Mexico, $157 billion, with Vietnam, $113 billion, and Ireland, $80 billion, and Germany, $76 billion. Now, China has a lot to do with manufacturing. Mexico and Vietnam are like throughput havens for Chinese producers that want to send cheap products into the United States and want to take advantage of lower taxes. Ireland has to do with a lot of tech companies which are based in Ireland, and Germany has a very strong automotive industry. So many German cars like BMW, Mercedes, those are generally German. Germany also does really well in appliances like fridges and washing machines, those kind of things. So yeah, the United States has almost $500 billion just by these 5 countries that it has a trade deficit with, all right? And that's just 5 countries. Of course, there's many more countries around the world, and here you see those trade deficits ranging from, China with 270 billion all the way to Indonesia, which in this screenshot is the lowest one, but $16 billion with Indonesia. And of course, there's many more countries on this list and in between, so Mexico, Vietnam, Ireland, Germany, Taiwan. So Taiwan is mostly semiconductors. Japan, so Japanese cars and appliances. South Korea, a lot of technology. Canada, a lot of natural resources. And the list goes on and on. And we've seen a very big decline of American manufacturing in the past few years because the United States, as the United States became more wealthy, it shifted from a manufacturing economy to a knowledge-based economy. Think about it right now. What is the dominant driving force in the United States? That's the tech industry. Google, Amazon, Meta, Nvidia, all of these United States publicly traded companies, they're producing a lot of wealth, but they're all engineering, financial-based companies, tech companies. So tech, finances, engineering. But not the production. No, we think about the concepts and then we outsource it to a low-labor country to produce it. And that's how we saw a massive decline in US manufacturing. So here you see a chart, US manufacturing as a percentage of the GDP, so the total economic output. So you see that it went from roughly 30% in the 1950s to around 10% in 2016. Here you see the number of workers working in manufacturing in the United States. You see that it dropped drastically from the 1980s till right now. Here's another chart, so the global share of manufacturing. You see that China is going up very quickly from 10% in 2024 to almost 30% in 2020. And you see it declining very rapidly in the US, the EU, and in Japan. And India is slowly increasing, but not as fast as China. So here is the key. If the United States imports more than it exports, it will create a trade deficit. In order to sustain that trade deficit, it needs to go in debt. In order, and if it goes in debt too much, then at one point it will go into a debt spiral and it will not be able to pay back its debt, which will cause the economy to basically go bankrupt. And that's how great empires go bust. We've seen this happen many times before. So here again, the United States, part of their plan is to bring back manufacturing to the United States in order to not be too reliant on external countries to produce the goods that the United States wants to consume. Here you see another chart about this trade balance. So you see the United States exports products and services, but it imports more. So the exports are the golden bars and the imports are the red bars. So whenever you import more than you export, you create a trade deficit. And right now, as the trend seems to indicate, the trade deficit will only become bigger and bigger and bigger if the United States doesn't do anything about this. But here is the plan. Let's discuss the plan of Donald Trump, the current president of the United States. But before we do, If you enjoy watching videos like this one, then make sure to smash the like button and to subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on in the financial market so that you can position yourself for maximum profits. Now, let's continue, guys. So what is Donald Trump's plan? Well, there are 6 pillars to this plan. Number 1 is the dollar must be weakened. Because with a strong dollar, it will be very expensive for other countries around the world to buy US produced products and services. If the dollar is weakened, meaning that if you go to, if the dollar is much weaker, and then with the pound, the euro, the yen, or whatever other currency, and you want to buy products and services from the United States, then suddenly they are much cheaper. And when something is much cheaper, then there's much less friction and much less of a barrier to buy those products and services. The second, well, what I can compare this with, I live in Bali, Indonesia, and one of the reasons why many people live here is because life is relatively cheap. Of course, there's many different levels. There's still a lot of luxury restaurants. There's still a lot of expensive goods that you can buy over here, or expensive services. But in general, because everything is so cheap, people consume a lot. So there's a very high velocity. People, they do everything. They go to restaurants, they buy products and services. And that's exactly what the United States wants to create as well. By weakening the dollar, they want to make it cheap for other countries to buy their products and services. And that kind of makes sense. And that could be one way for them to reduce their trade deficit. The second pillar is the United States must become a manufacturing economy again. So they want to become less reliant on external countries to develop their needed products and services. And they want to basically produce those in-house. And one of those very critical industries which they want to bring back to the United States is, for example, the semiconductor industry. So all of the chips that are in your computers and your smartphones. The United States wants to renegotiate the trade deals that it has with other countries. So right now it's bragging that because of all of these trade wars going on right now, they're negotiating with around 90 different trading partners, different countries, to renegotiate better trading terms for the United States. This should all lead to the end result that exports must exceed imports. So there's a trade surplus. They're making net money on trading. And the trade surplus can be used to pay off national debt. And if this happens, then the United States will become a healthy economy again. And then it can maintain its global dominance. This is kind of the game plan of the United States in a nutshell. And we're already seeing that the US dollar is already being devalued. So here you see a chart called the DXY. What is the DXY? It's a dollar strength index. It's basically how valuable the dollar is compared to a basket of other currencies. And you're seeing since Donald Trump basically became a president, you saw that the dollar went down in value compared to those other currencies. So it's already happening. And here are some of the currencies that are appreciating against the dollar. So the Russian ruble appreciated with around 38%, gold with 23%, Swedish krona 14%, silver 12%, Swiss francs 11%, the Czech koruna 10%, Japanese yen 10%, Hungarian forint 10%, Bulgarian lev 10%, Croatian kuna 10%. So what does this mean? Well, if you're holding these currencies and you want to buy products and services from the United States, then suddenly those are a lot less expensive, or they are much cheaper when you denominate them in your own currency. So yeah, this should actually stimulate the import of, this should stimulate the export of US-based products and services. Now, the big game plan behind all of this, the devaluing of the US dollar, is what we call the Mar-a-Lago Accords. The Mar-a-Lago Accords are based on events that happened in the past, which we're going to discuss in just a bit. So part of the Mar-a-Lago Accords, the biggest one is to devalue the US dollar. They want to increase tariffs, and by raising tariffs on imports, they want to generate money. So they established a new government body called the External Revenue Service, and it already generated many billions of dollars in import duties, which they can use to pump back into the economy or to pay off the debt. They want to reuse their gold. So some are saying that they want to sell some of their gold to buy Bitcoin, but they're also talking about establishing a sovereign wealth fund. Why? Because right now the United States has a big problem with the aging population, which all need to get social security benefits or retirement funds. And that's a very big liability for the United States. They need to pay billions of dollars in retirements in the next few years. And if they don't change the way that they manage their money right now, they might not be able to service it. They want to reduce debt by paying off debt. They, of course, make the interest payments that they need to make every single year on the debt a lot lower. So that will ease the pressure on the US economy and will allow it to flourish again. Here, you see a tweet of Donald Trump. He's basically threatening to raise the tariffs. He already raised a 125% tariff on China. And many other countries around the world are being tariffed. But now he authorized a 90-day pause on these tariff wars, except for China. So he wants to bring everyone to the negotiation table in order to negotiate better deals for the United States. They also worked on establishing the US Sovereign Wealth Fund already, so that they can manage the funds of the Social Security payments much better. And they are negotiating 90 deals. So with 90 different trading partners, so different countries, they want to establish new trading deals in the next 90 days, which is going to be very complex, of course, to work out a deal with everyone in such a short period. But they say Donald Trump is a deal maker, so who knows? Here they're actually saying that the White House is confirming that they are negotiating with 130 countries. So last week it was 90 countries. Now they're already negotiating with 130 countries. That's crazy. So India, Japan, and Korea are already working on friendly new deals. So Donald Trump keeps emphasizing that the people that approach them the fastest for a deal are the ones that are going to get the best deals. The Mar-a-Lago Accords are not yet confirmed, but something similar has happened in the past. So in 1944, we had the Breton Woods system, which was a new international monetary system which was forged by the delegates of 44 nations in the Breton Woods, New Hampshire. So what was the goal of this Breton Woods system? The United States would be coupled to the US dollar, and these 44 countries would couple their currency to the US dollar, meaning that it was all an interlinked system in order to stimulate the international trade relationships and the international trade, basically. Now, here you see the Bretton Woods Agreement is an agreement under which gold was the basis for the US dollar and other currencies were pegged to the US dollar. So we've already seen this happening in the past, that other countries around the world basically coupled their currency to the US dollar at favorable terms. And we didn't see it once, we saw it happen twice. Because we also saw the Plaza Accord. And the Plaza Accord was a 1985 agreement amongst the G5 nations, France, Germany, United States, the United Kingdom, and Japan, to manipulate the exchange rates by depreciating the US dollar relative to the Japanese yen and the German Deutsche Mark. So that's exactly a similar situation where the United States wants to be in right now. They want to bring everyone to the negotiation table to devalue the US dollar in order for them to enhance their exports and to reduce their trade deficit. Now, history often repeats, and although the Mar-a-Lago Accords are not yet confirmed, there is a very big likelihood that something like this might happen. And if it happens, who will benefit the most? You've probably guessed it, Bitcoin. Well, why will Bitcoin benefit from this? Well, if a simple document can be signed by delegates of different countries that will suddenly establish that the value of a certain currency is completely different from one day to another based on their own agenda, then what is the value of money, guys, if we can just change that from one day to the other? I do believe that when we are going to see something like this happen, I believe there will be a much bigger demand for Bitcoin, because Bitcoin is something that cannot be just manipulated by a bunch of government officials coming together in a room and signing a document. So I do believe that this will only make the case for Bitcoin a lot stronger. So let me know in the comments below if you agree with that statement and if you believe that a potential Mar-a-Lago Accord will also be very beneficial for Bitcoin. And also do me one quick favor, if you enjoyed watching this video, smash the like button. That would be good feedback for me to understand if you enjoyed watching this video and if I should make more videos like this one. And if you haven't done so yet, also make sure to subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on around you in the financial markets and to help you to position yourself for maximum profits. All right, hey guys, thanks for watching. Peace out, take care, and I will see you in the next one.